Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry. Today is Friday, May the 6th. The time is 2 a.m. GMT. Today we are going to take a look at the chart of the Russell 2045 minutes short-term chart. What a week. We got a very volatile price action before the FOMC, after the FOMC, and then we will end with the non-farm payroll on Friday. So it turns out that the rally after the FOMC was a false rally, was a trap. We've been telling members, despite the short squeeze, nothing changes, right? We still expect for the downside in the indices, and that's what we got. We turned lower again just one day after the FOMC meeting, right? And now we're going to be looking at the Russell to see where we are. Now we got the 45-minute chart here showing with A ended here as a 5 waves. We can see this with 5, 4, 3, and 2. So it's a 5 waves down ending A. And then we got a 3 waves rally, right? So if anybody thinks that this is bullish, well, it's only 3 waves. It's a very obvious 3 waves. So no bullish market is going to start with 3 waves rally, right? So this is only a correction. It's very clear that the rally after the FOMC is just a correction. 3 waves, you can see A, B, C, 100% sell off immediately. Despite this looking like a very strong candle, well, completely reversed. All right, so now it has started the next leg down. Is basically in the C leg that should be subdivided into a 5 waves, right? So now this becomes the key level. As long as we don't break above that high post FOMC, then we can continue to go down. Now this one is still black turning down. It's not red in color. It's because we have not broken below the A. So it still needs to break below the A, technically speaking, to confirm, so that we avoid a double correction like this, a WXY. But judging by the fact that the reaction lower here looks impulsive, so it is more likely that we actually will eventually break below the A and continue lower. Okay. Besides, if you look at the Nasdaq, for example, the Nasdaq already break the same equivalent low. So the Nasdaq is kind of already confirming that what we got from the post FOMC was a false move. It's a 3 ways move regardless, and then starting to turn lower again immediately. So now let's zoom out and see what we can expect with the Russell. This is a daily time frame of the Russell. We can see this move up and move down. This is the COVID-19 low. Everybody knows March 2020, and this is the all-time high, which is November 2021 across the board in all the US indices as well as any other indices for that matter, right? Alright, so what we got here is a 5 waves move ending A here. So let me put the A. This is your A right here on the daily time frame, and this is your B. So what that means then is we're gonna be starting the C leg. Now, because remember, if this is labeled as an A and a B, so this is not some kind of like an impulsive move from November 2021, right? And let's check out the the structure here. Okay, so you can see if I just draw a channel of some kind, let's say drawing a parallel channel like this, you can see there is a breakout here above the channel. So we can conclude that this entire move down ended somewhere here, either here or here, right? Take your pick, which one you like to finish here or finish here. If it finish here, then this is your connector because it breaks, and then we start the next leg down. That's going to be your third leg that can reach 100% of this. But if you pick it here, and why would you pick it here? Because this one is lower than this. Well, it's because this one looks like it could be counted as a 5 waves, right here, 1 2 3 4 5. So this then can be counted as some kind of a flat, right? Some kind of a flat. So let's put down some labels. So if let's say if I pick here as my first swing, or as my cycle, then you can label this as an ABC, as a 3 swing, and it, let's say, a W in the larger degree. And then you can label this as an expanded flat. The P breaks below here, but this one, because you can count it as like a 5 waves, you can count it like this without violating, I think, right? You can count it like this. Now you can, if you look at the momentum, it is even more clear. Look, from this peak, if you draw, this one absolutely has got nothing to do with this. So this is finished here, and then you get a new cycle. All right, so this is your connector. This is your connector from the peak. So this is one way to do it. Another way to do it is 1 2 3 4 5 ending A. This is another way to do it. But if you label 1 2 3 4 5, again, then you label this as a simple ABC. But you can argue this one might be able to see even like a 5 wave. So it doesn't matter. However, both are valid in my view. Both are valid, and there is no need to debate on which one should be the one, right? The one to be taking place. What matters is the sequence is incomplete, and we need more downside, and that's what matters. A lot of times we place a lot of emphasis and debating all single swing, or you have to label it this way, that way. But the most important thing is knowing the direction, right? And because we are traders first and foremost, and trying to be labeling forecasting as the second, right? I mean, that's more practical way to look at it instead of trying to be a textbook, forecaster. A lot of people just like debating every single thing as if they are like a textbook sort of Elliott Waiver. But we need to be practical as well, right? And okay, so assuming this is the count, then we can see we are now doing ABC, and the C eventually is going to end the Y, right? And so if we have started the select after just a brief 3 swing rally post FOMC and then starts to break down again, potentially we could be looking for extension lower to, let's take a look here, the C equal to the A at 1650, right, as the next potential target on the downside, right? Which is the C equal A, right? 1650, right? So no question that basically we are looking for the downside against that peak for now 1951, and this move down looks impulsive, so it looks like, yeah, we're gonna break here, looks like. And this one, what we do know also is clearly corrective here. Now what about the option? What will be in the alternate, right? The alternate is like this. The alternate, I think we can make a new low, but this new low, if you label it from here, right, 1 2, I can label this as an A here. So in other words, I can shift this 5, so I can shift the 4 and the 3 here, and this will be ending the 5. So what's the difference? Well, the difference is if this is playing out, then actually we just make a new low, and then from there we will get another rally, and even could be a bigger rally than we had in the post FOMC, right? So the key level remains to be over here, this late March, early April. I've been saying this, we discussed about the Dow as well in the previous start of the day. The key level is really this, right? A lot of people want to be in the shorter cycle, but unfortunately the whole idea is, as long as Dow, S&P, Russell and so on holds below that late March, early April, we're looking for the downside. But the way to go lower can take path into a couple of different possibilities, right? One way is, yes, Russell, this is your A and B, go down directly in C, right? Another possibility, we make a new low, but that new low in the Russell ending A, 1 2 3 4 5, and then you got yet another rally again, and that will throw a lot of people off. If that happens, a lot of people maybe over here they got into short at the weak positions, and then they got basically um, kicked out. They got flushed out from this rally after the FOMC, and then they think, oh my goodness, it probably starts to turn bullish, and then it reverse completely everything again. So now they think, oh, it's starting to get bearish again, but then it turns out, imagine, I mean, this is gonna be very painful trade if this alternate I'm talking about here plays out. You got a new low, everybody convinced again, oh, that was a false move, only to rally again big, throwing a lot of people off again, only then after that go down more, right? Go down again after that. So consider this other possibility as well, which is possible. We take the most aggressive view for now. That is to say, the A and B is finished. So now this becomes the important level in the short term, which is the post FOMC high. Is the most the we call it the first degree bearish pivot, right? The first degree bearish pivot. Now, if that pivot fails, you go to this alternate. We ended the late March with just a new low, right? And you got another rally even bigger than the one we had in the FOMC rally to correct the entire decline from late March before going down again. But the outcome remains the same. More downside is expected from the Russell until we hit more or less around this area, or you can use the WX from November, and you get this 1580 as your potential target on the downside. Okay, so that's the idea, and as always, we will keep updating so that we are on top of the market. We got 4 times update in the 1 hour time frame from the gold member, and if you want to try our service, we have 14 days trial. The link is provided in the description of the video. Also, I'll see you all again next time, and have a nice day, everyone.